What's up, everybody? I'm back. My voice is back. 2,000 points down in the Dow today. It was the biggest drop in history, not the biggest percentage drop, but the biggest nominal decline in history. 2,000 points down. Go back and watch my videos from early this year in January, how I was saying, got to get out, risk is high, got to get short, the market's overdone, the fiscal is slowing down. Hey, listen, I did a 26-mile hike on Saturday over the weekend, this past weekend. 26 miles. It was the hardest thing I ever did, and I have to tell you that there were numerous times during that hike that I wanted to quit. But I just kept pushing forward, man. Mental toughness. Hey, seriously though, and I did do that hike. It was unbelievable. Seriously, you got to take everything in life in perspective. There's ups, there's good times, and there's downs. There's bad times. Everybody can handle the good times. That's easy. I mean, let's face it. The good times are easy. But nothing stays the same. It changes. There's going to be bad times. There's going to be good times. And you know the old saying. I mean, when the going gets tough, the tough get going. And when you have these bad times, and I know it's probably hard for a lot. Look, I had a guy who emailed me this morning. He said, Mike, I can't believe this happened to me. My whole entire portfolio. This was my worst nightmare come true. My whole entire portfolio got blown out. And he said, I wish I had found you earlier. The guy just recently signed up. And he was like short gold. He was like in all the wrong positions. I said, how did that happen? You signed up. Yeah, but I just signed up a short while ago and I didn't turn my positions around as you recommended. He said, now I see the value in your service. And you know what I do is unique. I have said this so many times. It is applying the concepts and understandings of MMT to trading and investing. And that's powerful because that is the correct understanding of how the monetary system functions. So we can see these things in advance. We know how policy is going to affect the markets. Sorry, a little bit of a cold left over. We know how policy, and it's not coronavirus. I'm good. We see how policy is going to affect the markets. Here's another thing, the oil price. Yeah, let's talk about this, the oil price crash. By the way, today's Monday. I put out the new edition of MMT Trader. You got to get it, folks. I'm telling you. Another guy, he made like 5 years worth of subscriptions on just, the recent recommendations that I gave with this stock market sell-off. 5 years. At $395 a month. Do the calculation on that. You're not going to get this information anywhere else. Let's talk about the oil price crash. I told you a couple of weeks ago, I think really 2 or 3 videos back, I said, something very unusual happened. Commercials who had been net long, and the price dropped from 57 back in January, like from 57 down to the mid 40s. They were net long. And then it bounced up to 49, 50, 54. They got short up there. And I said, it's very unusual to see the commercials flip their position before realizing that initial price where they got in. So it didn't get up to 57 again, but they were selling 49, 50, 51, 52, 53, 54, they're short. They got short, we got short before this price plunge. And by the way, I thought there would be an agreement on the extended OPEC output cuts. I thought Russia would go along because I thought Russia wanted to solidify a strong relationship with the Saudis. We were short anyway based on what the commercials were doing, but wow. Russia basically said on Friday, hey guys, pump whatever you want to pump. We are tired of seeing our market share erode to U.S. shale producers. And when that meeting fell apart, the Saudis went crazy. They slashed prices in a big way, big time, big way, $6 to $8 a barrel over the weekend. They're going to raise output to over 10 million, some are saying up to 12 million barrels a day. We are going to see a deep collapse in oil prices. I mean, you really have to wait now until U.S. domestic production starts to really drop. Because at 13.1 million barrels a day, which is the current level that we're producing in the United States, the effect of this price collapse, you're going to have to see U.S. production come down before you can even think about a bottom. Now, as far as the coronavirus is concerned, it's incredible, I have to say. In the most recent data, and we saw the jobs data on Friday, very strong, and all of the banking data, there's really nothing in there that indicates any economic weakness. But like I'm saying now, look, we have to respect the magnitude and the ferocity of these market moves. And even if there was nothing in the if there's nothing in the data so far really that you could point to saying, aha, look, here's a contraction happening, I think it's a foregone conclusion at this point that these market moves, the magnitude and the ferocity of these moves, will cause eventually the data to start showing up very negative. And of course there's going to be a look at bond yields, right? 0.5, under 0.5 on the 10-year, under 1% on the 30-year. The Fed now expected to cut 2 more times, in one time in the meeting coming up next week and another time in April. Going to take rates down to 0, probably engage in a new round of quantitative easing. But all that stuff, that's not going to help. You need fiscal policy response right now. You need a fiscal policy response right now. That's being discussed. We have to wait and see what they're coming up with. So far, everything that's being mentioned sounds to me like, you know, a tiny little Band-Aid. It's not going to fix anything. Anyway, I have all this stuff in my report this week. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye-bye.